I've spent 30 years studying trader psychology, and I'm about to tell you something that might make you angry. Most of what you've learned about trading is noise. The hundreds of rules, the complex strategies, the endless indicators, they're not helping you. They're paralyzing you. Because here's the truth. There are only 7 rules that actually matter. 7. Not 70, not 700. 7 fundamental principles that, if you internalize them, make everything else irrelevant. The reason you're struggling isn't because you don't know enough. It's because you know too much. You're drowning in information when what you need is clarity. This video strips away everything that doesn't matter and leaves you with the only 7 rules you'll ever need. I know that might sound too simple. You might be thinking, Mark, I've spent months, maybe years, learning this stuff. Are you telling me most of it doesn't matter? And the answer is yes. That's exactly what I'm telling you. Because I've been where you are. I've sat in front of screens with notebooks full of rules, with color-coded systems, with flow charts for every possible market condition. And you know what all that complexity gave me? Paralysis, confusion, and losses. You're overwhelmed right now. You've been told you need 100 rules, 1,000 hours of screen time, mastery of technical analysis, fundamental analysis, sentiment analysis, and you're exhausted before you even place a trade. The core misunderstanding that's keeping you stuck is this. You think more rules equals more safety. But complexity doesn't create security, it creates paralysis. What this video delivers is 7 non-negotiable principles that every consistently profitable trader follows, whether they know it or not. These aren't tips or hacks. They're the foundational truths that make everything else work. And here's the unique insight. These 7 rules don't tell you what to trade. They tell you how to relate to uncertainty. They're not strategy-specific. They're psychology-specific, which means they work for day trading, swing trading, investing, any time frame, any market. The myth I need to bust right now is this. You don't need a more complicated system. You need a simpler relationship with risk. And what makes these 7 rules different from everything else you've heard is that they're designed to be memorable, embodiable, and mutually reinforcing. You won't need a checklist taped to your monitor. These rules will become who you are. Let me tell you about someone who came to me a few years ago. I'm going to call him Robert. Robert showed up to our first meeting with a 3-ring binder, and this wasn't just any binder. This thing was a masterpiece of organization. Color-coded tabs, laminated pages, flow charts for every scenario you could imagine. He'd spent 6 months creating it. He had rules for trending markets, rules for ranging markets, rules for high volatility, rules for low volatility, rules for entering, rules for exiting, rules for position sizing based on 7 different variables. I counted them once. He had over 300 rules in that binder. And I asked him the obvious question, Robert, are you making money? And he looked down at his hands and said, No, I'm not. I'm losing consistently. And I don't understand why, because I have all the rules. I've thought of everything. So I asked him to describe his typical trading day. And here's what he told me. He'd wake up, analyze the markets, identify potential setups. Then he'd open the binder. He'd flip to the relevant section. He'd start reading through the rules to make sure the setup qualified. But by the time he'd gone through the checklist, the trade opportunity would be gone. Or worse, he'd look up one rule and it would say to enter. Then he'd look up another rule and it would say to wait. And he'd sit there frozen, unable to decide which rule took priority. The binder wasn't a tool. It was a monument to his anxiety. It was 300 different ways of trying to control something that can't be controlled. And I said to Robert, what would you do if you lost the binder? If all you had right now was your gut instinct, what would you do differently? And he thought about it for a minute, and he said, honestly, I'd probably just follow my stop losses. I'd keep my position size small, and I wouldn't revenge trade after losses. Those are the things I know I should do. And I said, Robert, that's 3 rules. Why do you need 300? And I watched his face change. Because in that moment, he realized something. The complexity wasn't helping him. It was protecting him from having to feel the discomfort of simplicity. Because if you only have 3 rules and you fail, there's nowhere to hide. But if you have 300 rules, you can always tell yourself, well, I just need to learn the system better. I need to master more rules. The complexity becomes an excuse. And that's what most traders are doing. They're adding rules not because the rules help, but because the rules make them feel like they're doing something, like they're in control. But real control doesn't come from having a rule for every possible situation. Real control comes from having a few unshakable principles that guide you no matter what situation you're in. Think about it this way. Imagine you're navigating through a forest at night. It's dark. You can barely see 3 feet in front of you. Now, you could carry 100 different tools with you. A flashlight, a map, a GPS, a compass, flares, rope, a first aid kit, a tent, food, water. And sure, all of those things might be useful. But if you can only carry what fits in your pockets, what do you take? You take a compass, one tool, simple, reliable. It doesn't tell you every step to take. It doesn't give you detailed instructions for every obstacle you might encounter. It just tells you which direction is north. And as long as you know which direction you're heading, you can figure out the steps as you go. These 7 rules I'm about to give you, they're your compass. They don't give you a step-by-step path through every market condition. They give you directional clarity. When you're in a trade and you're feeling confused or scared or tempted to break your plan, you ask yourself one question. Is this action aligned with my rules? Yes or no? That's all you need to navigate uncertainty, not 300 contingencies. 7 principles, 7 directions. And the clarity that comes from that simplicity is worth more than all the complex strategies in the world. So, what are these 7 rules? Let me break them down for you one by one, and I want you to really listen, because each of these rules is going to challenge something you've been taught. Rule number 1, define your risk before you define your reward. Most traders look at a setup and the first thing they think is, how much can I make on this trade? They're seeing dollar signs, they're calculating profit targets, they're imagining what they'll do with the money. But profitable traders think completely differently. The first thing they think is, how much am I willing to lose? Where's my stop? What's my maximum downside? Risk-first thinking changes everything. Because when you know your risk before you enter, the trade loses its emotional grip on you. You've already accepted the worst-case scenario. You've already decided that if this trade goes against me, I'm out at this price and I'm okay with that loss. And here's why this matters. You can't control reward. The market decides how far a trade will run, but you can control risk. You can decide exactly where you'll exit if you're wrong. So start with what you can control. And when you make that mental shift, when risk becomes your starting point instead of reward, trading becomes less about hoping and more about managing. You're not gambling anymore. You're making calculated decisions with known downside, and that shift alone will save you from more blown accounts than any indicator ever could. Rule number 2, never risk more than you can afford to lose without emotional distortion. Now, when I say afford, I don't mean financially. I mean psychologically. If losing $100 on a trade makes you want to immediately jump back in and make it back, your risk is too high. If losing $1,000 keeps you awake at night, replaying the trade over and over, your risk is too high. Here's the test. Can you lose this amount and still execute your next trade according to your plan? If the answer is no, if a loss would make you emotional, reactive, desperate, then your position size is too big. And here's the paradox that most traders miss. The smaller your risk relative to your emotional tolerance, the clearer you think. Clear thinking produces better decisions. Better decisions compound over time. But most traders do the opposite. They size too big because they want to make meaningful money quickly. And what happens? They take one loss, and it rattles them. They take two losses, and they're in revenge mode. They take three losses, and they abandon their system entirely. They destroy themselves emotionally before the market ever gets a chance to reward them. So, this rule is about self-protection. It's about keeping yourself in a mental state where you can trade well. And that means keeping your risk small enough that losses feel manageable, not catastrophic. Rule number 3. Every trade is independent. The last trade has zero bearing on this one. This is the hardest rule to internalize because it goes against how your brain works. Your brain is a pattern recognition machine. It wants the last 3 losses to mean that the next trade will win. It wants the last 5 wins to mean you're on a hot streak. But the market doesn't know or care about your last trade. If you have a real edge, if your system has positive expectancy, then each trade is a fresh flip of the coin. The past results don't influence future probabilities. And this is where revenge trading comes from. You take a loss and you feel like the market owes you one. So you jump into the next trade not because it meets your criteria, but because you need to make back what you just lost. Or the opposite happens. You have 3 wins in a row and you start feeling invincible. So you size up or take a marginal setup because you're on a winning streak. Both of these behaviors come from violating Rule 3. Both of them will destroy you. The practice here is simple but difficult. Treat every trade like it's your first trade of the day, emotionally neutral. No baggage from what happened before. This trade stands alone. And whether you won or lost on the last one is completely irrelevant to how you should approach this one. Rule number 4. Think in probabilities, not certainties. You will never know if this specific trade will win. Never. Even if everything looks perfect, even if you've done all your analysis, even if every indicator is lined up, you don't know. But here's what you can know. You can know if this type of setup repeated over 100 occurrences has positive expectancy. That's the shift. Stop asking, will this work? And start asking, does this setup have an edge? If yes, take it. The outcome of this particular trade is irrelevant. If no, skip it, no matter how perfect it looks in the moment. This is hard because your brain is wired for narrative and certainty. You want to know the story. You want to know what's going to happen. But probability thinking feels uncomfortable. It requires sitting in I don't know. It requires taking action while being uncertain about the result. And most people can't do that. They need to feel sure before they act. But in trading, if you wait until you feel sure, you'll either never trade or you'll only trade when you've convinced yourself of a certainty that doesn't exist. And that false certainty is dangerous because it leads to oversized positions and stubborn holding when you're wrong. Comfort with I don't know is the trader's superpower, and Rule 4 is about building that comfort. Rule number 5. The market owes you nothing. Let go of expectations. You can do everything right and lose. You can follow every rule, execute perfectly, and still watch the trade go against you. And that's okay. That's just how probability works. But here's the emotional trap. When you lose despite following your rules, there's this feeling of betrayal. Like you did your part, so the market should have done its part. That feeling comes from an unspoken expectation. An expectation that says, if I work hard, if I analyze correctly, if I'm disciplined, I deserve to win. But that contract doesn't exist. The market is not obligated to reward good analysis. It's not obligated to reward discipline or hard work or anything else. And when you release that expectation, when you let go of the idea that the market owes you anything, you release resentment. You stop taking losses personally. A loss is just information. The market said, not this time. Okay, next trade. There's no emotional charge. There's no sense of unfairness. It just is, and that emotional neutrality, that acceptance of the market's indifference, is what allows you to keep executing your process without getting bitter or desperate or angry. The market doesn't care about you, and once you really accept that, once you stop expecting it to care, you'll be free. Rule number 6. Protect your capital like it's the last money you'll ever have. Capital preservation is not defensive. It's offensive. You can't compound gains if you blow up. And here's the math that every trader needs to understand. Every dollar you lose requires an exponentially larger gain to recover. If you lose 50% of your account, you need 100% gain just to break even. If you lose 75%, you need a 300% gain. Those are not realistic numbers, which means blowing up isn't just a setback. It's often a death sentence for your trading career. Your job is not to make as much money as possible, as fast as possible. Your job is to stay in the game long enough for your edge to play out. And big wins don't come from big risks. They come from being present, from being in the market with capital available when opportunity appears. And you can only be present if you didn't blow up last month chasing a home run. This is why the best traders are obsessed with defense. They're not trying to hit every pitch out of the park. They're trying to not strike out. Because in trading, defense wins championships. And defense means risk management. It means position sizing. It means knowing when to step back. It means protecting your capital like your entire future depends on it. Because it does. Rule number 7. When in doubt, do nothing. No trade is better than a bad trade. Fear of missing out kills more accounts than stop losses ever will. If a trade doesn't meet your criteria, don't take it. If you're uncertain, sit out. If you're emotionally compromised, step away. Doing nothing is an action. It's the action of protecting yourself from yourself. Most traders overtrade because sitting still feels like they're not working. It feels like they're being lazy or missing opportunities. But sitting still is the work when conditions aren't right. The best traders I know, the consistently profitable ones, they're masters of inaction. They wait. They let dozens of setups pass by because those setups don't meet their specific criteria. They're not trying to catch every move. They're waiting for their pitch. And when their pitch comes, when all their conditions align, they swing hard. But the rest of the time, they're sitting on their hands. And that patience, that willingness to do nothing for hours or days until the right setup appears, that's what separates professionals from amateurs. Amateurs think they need to be active to be productive. Professionals know that sometimes the most productive thing you can do is absolutely nothing. Now, these 7 rules work together. They're not isolated tips that you can pick and choose from. They're a system of thinking. Rule 1 and 2, they're about controlling what you can control, your risk and your position size. Rule 3 and 4, they're about accepting what you can't control. Individual outcomes. You can only control probabilities over time. Rule 5 and 6, they're about protecting yourself emotionally and financially. No expectations means no resentment. Capital preservation means you stay in the game. And Rule 7 ties it all together. It says honor these rules by knowing when not to trade, by having the discipline to wait for conditions that align with your edge. Each rule reinforces the others. If you define your risk first, it's easier to size appropriately. If you think in probabilities, it's easier to let go of expectations. If you protect your capital, it's easier to do nothing when setups aren't clear. Together, these 7 rules create psychological and financial resilience. They create a framework within which you can operate consistently, regardless of market conditions. And that's what consistency is. It's not winning every day. It's behaving the same way every day, even when conditions change. But here's the thing. Knowing the rules intellectually and living them under pressure are completely different things. You can read these 7 rules, you can nod your head and say, yes, that makes sense, and then tomorrow you can violate all 7 of them in the span of an hour. Because knowing and doing are not the same. So how do you actually embody these rules? How do you move them from your head into your nervous system where they become automatic? First practice, write the 7 rules by hand every morning. Before you start trading, before you even look at a chart, write all 7 rules on a note card. By hand. Not typed, not written. And I know this sounds tedious. I know it sounds too simple to matter. But writing by hand engages different neural pathways than typing or reading. It's slow, it's deliberate, it's embodied. You're not just processing information, you're inscribing it into your nervous system. This takes 3 minutes. Do it for 30 days straight. And by day 30, you won't need the card anymore. The rules will be internal. They'll be part of how you think. But you have to do the work of repetition. You have to overwrite the old patterns with new ones. And writing by hand is one of the most effective ways to do that. Second practice, the pre-trade checklist. Before entering any trade, ask yourself 3 questions. Have I defined my exact stop loss? That's rule 1. Is my position size within my emotional tolerance? That's rule 2. Does this trade meet my system criteria, or am I forcing it? That's rule 4 and 7. 3 questions. That's it. If all 3 are yes, take the trade. If any are no, skip it. No exceptions, no negotiations, no convincing yourself that this time is different. 3 questions, 3 yeses, or you don't trade. This checklist keeps you aligned with the rules in real time. It creates a pause between seeing a setup and acting on it, and in that pause, you can catch yourself before you violate your own principles. Third practice, the post-trade reflection. After each trade, win or loss, write 1 sentence. Which rule did I honor most? Which did I struggle with? You're not judging yourself. You're not beating yourself up. You're just noticing. And over time, patterns will emerge. Maybe you always honor Rule 1. You always define your risk. But you consistently violate Rule 5. You take losses personally. You feel like the market owes you. That's your growth edge. That's where you need to focus. And the beautiful thing about this practice is you can focus on 1 rule at a time. You don't have to master all 7 simultaneously. Pick the rule you struggle with most and work on it for a week. Then move to the next one, gradual improvement, sustainable growth. 4th practice, the emergency pause protocol. When you feel the urge to break a rule, when you want to revenge trade or size up out of frustration or ignore your stop, here's what you do. Stop, stand up, walk away from the screen. 90 seconds, that's all. And while you're walking, repeat the rule you're about to violate out loud. Every trade is independent. The last trade has 0 bearing on this one. Say it 5 times, 10 times. Then come back and decide whether you still want to take that action. 80% of the time, the urge will dissolve. You're creating space between impulse and action. You're giving your rational mind a chance to catch up with your emotional reaction. And that space, that 90-second pause, can save you from catastrophic decisions. 5th practice, the weekly rule audit. End of the week, score yourself 1 to 10 on each of the 7 rules. Did I always define risk first? Maybe you give yourself an 8 out of 10. Did I trade within my emotional tolerance? Maybe a 6. Did I treat each trade as independent? 7 out of 10. You're not aiming for perfection. You're aiming for progress, and you track these scores over months. As your scores rise, your consistency will rise with them. This audit creates accountability. It makes the rules measurable. And what gets measured gets managed. Now let me bring this all together because I want to make sure you walk away from this video with absolute clarity. You've been told you need to master 100 skills, memorize 1,000 patterns, understand every market condition. And under that weight, you've been crushed. You're exhausted before you even start. But here's the truth. Trading mastery isn't about knowing more. It's about living by less. 7 rules, 7 principles that every profitable trader I've ever met follows whether they articulate them or not. Define your risk first. Size according to your emotional tolerance. Treat every trade as independent. Think in probabilities. Release expectations. Protect your capital. When in doubt, do nothing. That's it. That's the entire game. Everything else is commentary. Everything else is decoration. These 7 rules are the foundation. And if your foundation is solid, you can build anything on top of it. Any strategy, any time frame, any market. But if your foundation is cluttered with conflicting advice, with hundreds of half-remembered rules, with strategies you don't really understand, you'll never build anything that lasts. It'll collapse under its own weight. The traders who make it, the ones who survive and thrive, they're not smarter than you. They're not more disciplined in some superhuman way. They're just simpler. They've stripped away everything that doesn't matter, and they've committed to the few things that do. And you can do that too, starting today, right now. You don't need permission. You don't need more education. You just need to let go of the complexity you've been clinging to and embrace the simplicity that actually works. Here's what I want you to remember. You're not failing because you don't know enough. You're failing because you're trying to know everything. The path to consistency isn't addition, it's subtraction. It's removing everything that creates confusion and keeping only what creates clarity. These 7 rules aren't restrictions, they're liberation. They're the boundaries within which you can finally think clearly, trade confidently, and sleep peacefully. You don't need 100 rules to be safe. You need 7 rules you actually follow. And here's the beautiful thing. These rules aren't about the market. They're about you. They're about how you relate to risk, how you handle uncertainty, how you protect yourself from your worst impulses. Master these, and it doesn't matter what the market does. It doesn't matter if we're in a bull market or a bear market. It doesn't matter if volatility is high or low. You'll be okay. Not because you'll win every trade, but because you'll stay in the game long enough to let your edge compound. You'll survive. And in trading, survival is 90% of success. So, if these 7 rules resonated with you, if you feel lighter knowing you don't need to master everything, just master 7 things, leave a comment. Tell me which rule you struggle with most. Is it treating trades as independent? Is it letting go of expectations? Is it doing nothing when you're uncertain? I want to know, because naming your struggle is the first step to healing it. And maybe your comment will help someone else who's struggling with the same thing. We're all in this together. We're all trying to figure out how to navigate uncertainty with grace. And if you want more of this, if you want clear, simple, psychologically grounded wisdom that cuts through the noise, subscribe. Because I'm not here to teach you 50 new indicators. I'm not here to sell you a complicated system. I'm here to help you strip away everything that doesn't matter so you can finally see what does. And what does matter is simple. It's always been simple. We just made it complicated because we were scared of the simplicity. Thanks for being here. Thanks for being willing to simplify instead of complicate. Thanks for being open to the idea that less might actually be more. And remember, 7 rules. Write them down. Live them. That's enough. That's more than enough. That's everything.